HCL, TCS, Infi, all of them in the green as well. That followed by PSU Bank, so some strength regaining over here as well. Realty, energy, banks, FMCG, pharma, with pharma and metal slightly on the flat line, but on the flip side, deep pressure coming in on Nifty Auto. So that is what our trade setup is looking like right now. On the back of that negotiation that is now open, as hinted by PM Modi as well as President Donald Trump, they're going to be looking forward to working out the trade deal on that extra 25% tariff on India. So that has sparked hopes once again for the textile sector today, with names like Welspun living up 10%. You have Vardhman Textiles also up 6%. Trident, Gokuldas, all of them are doing very well, as is the case with Avanti Feeds today, because the export negotiation is now open, and also on the back of that EU news coming in, wherein they have certified 102 companies from India as export potential companies. So very positive move coming in on Avanti Feeds. These are some of the top gainers in today's trading session. Almost a 16% uptick coming over here as well. So that is what the market setup is looking like right now. Let's get into conversation with Dipan Mehta, director at Elixir Equities, on the fundamentals and on the technicals. We also have Kunal, who's joined us in the studio. So good afternoon to both of you. Dipan, let's come to you first. The kind of move we've seen today, we've managed to hold on to some bit of it, while we fizzled off from the day's high, but 25,000 still doesn't look all that far. Now, in the backdrop of these tweets coming in early morning that Trump and Modi are both open to negotiation, where do you think the market could head from here? And is this finally the fillip that the market needed to get out of this, near-term range that we've been seeing?
Good afternoon, and thank you for having me on your show. Yes, I think that if a favorable trade deal is concluded, then it will be a sentiment booster and just the trigger required for the market to move out of that very narrow trading range it has been in for so many months. But end of the day, I don't think fundamentally it will impact a large number of companies. As when the trade deal did come through, it did not impact a large number of companies because exports to US, especially listed companies, were impacted by the tariff which I imposed just now, a very few. So it's just a sentimental effect. I don't think it will have much of an impact on the corporate earnings. But right now, I think what the street is really focused on is whether in this particular festive season, we will see an improvement in the earnings growth rate. The reason the market is pinned down is because earnings growth is not coming through. And now many measures have been taken to boost earnings growth, and we need to now finally see whether the earnings actually go up, and that I think only can take the markets higher. Of course, markets not correcting because of the huge surge of liquidity coming in from retail investors, but how long that will also last is questionable. But most importantly, I think the eye has to be on earnings growth.
All right, so that's the take coming in on the markets. But Deepan, one such sector which is expected to be the biggest beneficiary of the GST reset is actually the auto space. We have already seen very good moves, but today it's the top sectoral loser. Deepan, do you think that one should take this as an opportunity to maybe once again and make a re-entry in select auto counters, or rather do you believe that they have run way ahead of their time?
No, I still believe that we should be overweight auto companies, and with usual disclosure that we and our clients are interested, invested. Entry-level companies like Hero MotoCorp certainly, are far more interesting than some of the peer group companies. The valuations also are reasonable, and with rural demand expected to pick up, that's one company which can benefit. So the two-wheeler, Hero MotoCorp and Aisha Motors, of course, have been an all-time favorite of ours. These are the two companies to consider. And in the four-wheeler side, very, very positive one. M&M, again, disclosure required over here. So I think investors should be overweight the auto industry. Definitely, we are expecting a nice improvement in the volumes across the board. And even if you have shares in other companies, I think whether it's Bajaj Auto or TVS or Maruti, I think the entire sector should do pretty well over the next few quarters or so. Raw material costs are benign. And I think the auto industry, all of them, will take this GST cut opportunity and put in everything that's required to boost their sales. And who knows if they get volumes which are in double-digit growth rate, then that could be a big fillip to the bottom line of these companies.
Still optimistic on autos.